Hello and welcome to Going the Distance with Go Long. I am Jill Consor Beck, founder of Go Long. Go Long is an accountability coaching via texting service. So whatever it is that you are trying to make time for, whether it's that side hustle, whether it's trying to figure out how you can put boundaries in at work, whether it's making more time for exercise, whatever that is, Go Long helps you do that in a supportive way that's very much aligned to what is happening in your life at that point in time. It is very much situationally support based. And with that, I'm here with Megan McNally. And Megan's background is extensive and it's really awesome. And we're going to be talking about angel investing today and how you may be able to be involved in angel investing. It's kind of this weird term and a lot of people don't know about it, and we're going to try and simplify it because that's what we do on this show. So, Megan, welcome to the show.
Thanks so much. Can I tell you how much I love the name of your show, Go Long, as
Oh.
somebody who is in my mid-50s and thinking a lot about still being able to go long from here, like from this vantage point forward? I love it. Thanks for having me.
Yeah, that's the whole thing. It's going the distance, and that means doing it with quality and living your best life until the end. So let's do it. Megan, tell us how you got here.
Yeah, you bet. I should check with you, Jill, first and make sure. Are you going to bleep me when I swear? Can I swear liberally? Do I need to watch my mouth? What? Okay.
Does that answer your question?
Great. Excellent. So you have a bullshit detector. So yeah, so I'll
Yes.
listen for that in case that goes off at any
But
time.
that's also translation for you can swear as much as you want on this show.
Excellent. Because we're at a moment in time, Jill, where swearing is absolutely appropriate, and I'm concerned about people that aren't swearing at this point. But so my background. So I live here in Seattle. So I'm in Seattle, Washington. I'm a kid who grew up in a small town in Florida and found my way out west. Important just to say that I couldn't get far enough away fast enough. So not an accident that I ended up on the literally, the opposing end of the contiguous lower 48 states. But I actually began my career working with environmental organizations, specifically wildlands protection. Fell in love with wildlands when I first visited the American West and really wanted to be a part of saving those lands. And I think one of the first things I learned as I got started in my career is that organizations can have really visionary founders and they can have big, important missions. But if they can't run a sustainable organization that can actually take care of their people and keep the lights on, right, and keep operations running, then those visions and those missions are really at risk. And I stumbled into, my maybe the second chapter of my career, I guess, was, I stumbled into an area called capacity building. Literally walked through the doors of a nonprofit 25 years ago that had been formed to provide IT support to other nonprofits. So 25 years ago, for those of us my age, we might remember that at the turn of the century, information technology was changing so dramatically and so quickly. It was changing how everything got done. And those advancements really threatened the nonprofit sector, which didn't have the resources to keep up with that. So I stumbled into this area of work that was just perfectly aligned with what I realized was my passion, which is helping organizations become sustainable, be able to continue to exist to do the important work that they want to do. And even though I thought early in my career, my intention was to go to law school and practice environmental law, I got sidetracked on this capacity building path for quite a number of years and had some really cool jobs during that time. And by the time I went back to law school, I studied business and tax law instead of environmental law because I really kind of found my place in the parts that other people think are boring, right? Like I really care about setting up. It doesn't matter if it's a for-profit business, a startup, a small business, a nonprofit. All of them, no matter what, have to have a solid foundation beneath them for that visionary founder to be able to deliver. So that's kind of how I got into what I do today.
So you went from environmental law as the thing you wanted to study to tax and business law. I don't know if there's a bigger 180. There might be a bigger 180. I'm not sure. But it sounds pretty close to as a 180 as you can get. So then you're practicing law and you started an organization for entrepreneurs, right? So maybe you could talk about that and then how you got into FBomb.
Yeah,
More how you expanded FBomb.
yeah, exactly. Um, so I opened my own law practice. And I didn't think that I would. I really wanted to have this additional set of tools in my tool belt for working with the organizations that I worked with and working on the kinds of projects that I was lucky enough to be involved in. But I really did love the law practice side of things. So I opened my own law practice, and I happened to do it at about the same time that I also had this idea for building an app unrelated to law practice. I happen to be a sports fan. I love watching bike racing. It's hard to follow professional bike racing from the US. It was especially hard a decade ago. And so I was, beginning to build and scale this law firm, while also trying to figure out how do you build a little app on the side. And so I started showing up in the startup community. It hadn't really been integrated in the startup community before that. And I was blown away at the level of misogyny. I thought I had experienced plenty of misogyny just being in the business world generally, in the legal world. But there is a very unique flavor of that in the startup world. And I felt like I kept having the same conversation over and over again with people, which is, these just patronizing assumptions about what I was building and what my vision was and what my capacity was to build it. I think one of the things that aggravated me the most is when I would tell people that I was building a law firm, their first assumption was that it was probably family law, right? Especially dudes would be like, oh yeah, I got an aunt who does adoptions. I know. So like, what is it about me that makes you think I have any fucking interest in family law? Like,
Right.
it's just this assumption that women practice certain kinds of law,
Yeah.
right? And then then the second assumption was that I probably just like, hung a shingle out and was taking a couple of clients here and there. And, I was building a scalable law firm and had vision to continue to scale up a serious, credible corporate law firm. And so, and then God forbid I mentioned I had an interest in sports. I was working on
Oh,
a sports app, right? It was just maddening, the kind of gatekeeping questions. And so I really thought, Jill, I was like, there just has to be a better way to cut through the fucking noise and talk about the how. There's plenty of support for starting things. There's not as much support for how do you scale? How do you grow? And so I'm like, how do I get to these conversations? How do you just cut through this bullshit? And so I wrote a blog post that said, look, if any other women are building businesses in male dominated spaces and you want to get together and you want to talk about how to scale and you don't want to waste time cutting through all of the, patronizing bullshit, I'll provide the space. I'll provide coffee and donuts. You just have to get up early in the morning to meet me because once the business day starts, I don't have time for networking anymore. I'm not a lady who lunches, right?
yeah.
Um, and so that was the beginning of what became the FBomb Breakfast Club. I wrote this little blog post that got picked up. A couple of dozen women showed up to the very first meeting. And we decided to keep going. So we met on the first fucking Friday of every month at the Ass Crack of Dawn, always the same place, always the same time. And over a few years, that grew into a community of more than 5,000 women founders and women business owners. And until the pandemic, we met for years. Those meetings were in person. I was always surprised that people kept showing up, but it really just demonstrated how hungry so many of us were to be able to talk about business without having to defend why and without having to just, like I said, kind of suffer through all of that, like gatekeeping to just get to information. So that was the origins of the F-Bomb Breakfast Club. And it was a surprise and a delight, and I loved it. And I loved how much I constantly got to learn. I believe very much in the power of community. I am a better person for the people who are around me, and that club, that community brought amazing, amazing people into my sphere who I still learn from today. And one of the things that we did in the F-Bomb Breakfast Club is we held an annual competition called Pitches to Bitches. In the first years, that was just about finding the woman amongst us with the best new business idea. And then we'd wrap her with a year of support from the club. But we learned pretty quickly, like, we're really good at picking promising businesses, but there's no amount of support you can wrap around that founder that's going to help her really get it off the ground and get to scale if she doesn't have the money to match those good intentions. So that's how we ended up piloting what became the FBomb Angels Investment Club. And that's where I spend my time now, is supporting a community of women involved in angel investing.
Wow. Yeah. That's such an extraordinary arc so far, right? So, all right, Megan, let's talk a little bit about angel investing, right? Because that's really now what, you're doing. And I think that it's a term that people may hear. They don't know. They think it's for certain people, maybe not them. So maybe we could take it back a few steps and talk about whether it's angel investing 101 or maybe just the backstory of how angel investing became a thing.
Yeah, you bet. I love this because I love to take the mystery out of it, right?
Yeah.
So the first thing to know is it's not a legal term. An angel investor is not a real thing. It's a colloquial term. And the term comes from a time when on Broadway, to get plays off the ground, to get productions off the ground, often, the producers needed money to be able to produce the next play or the next musical. And there were patrons of the arts who said, well, I don't just want to give money away charitably. Like, I'll invest in your production, for a cut of the returns when they come in. And that's kind of where they were born. So they were originally thought of as these angels who came in and helped rescue productions early on.
I
That's
had
the
no
origins
idea
of
this
it.
I had
Yeah,
no idea this came. I grew up growing at Broadway shows because
there
I'm
you are.
from New York and my mom was a ticket broker and I had no idea of the connection. That's amazing.
Yeah, so that's where it all began. And now when we talk about angel investors, we're talking about something entirely different. So
Right.
we're really not talking about funding Broadway productions. When you hear someone talk about an angel investor today, mostly what they're talking about is individual investors who put early stage money into startups in their very earliest stages. So an angel investor is a person who invests their own money into companies that are not yet companies that are traded right on a public market. So you and I could log on to Fidelity today and create an account and buy shares in Microsoft if we wanted to. Microsoft is a publicly traded company. You can buy and sell shares right freely on an open market. But most companies are not on those public markets yet, right? Most companies are private and will stay privately held. And there are rules, legal rules around who those private companies can solicit investment from and who can make investment in those companies. And that's designed to help kind of protect people against the risk, right? The risk of investing in a company that does not yet have to meet all of these requirements around public disclosures. Because if you and I were going to buy Microsoft stock today, we could easily find out all kinds of information about Microsoft's finances and operations and its plans and its staffing. And, there's lots of disclosures we could comb through that help us form or make an informed decision about whether or not to buy shares of Microsoft. That's not the case for privately held
And also in a
companies.
public company, as someone who is subject to these restrictions, there are certain people at the company who have trading windows when they cannot trade any of their stock as well because they know what's going to be reported in earnings reports and whatnot. So there's also that element of when you're investing in a public company, you're not going to see that happen with executives during certain times of the year because they have material information that can impact the stock price.
Yeah, and learning all of that helps you make those informed decisions, right? About whether to buy, how much to buy, when to buy, at what price to buy, all of that. But when we're talking about companies that have not yet been offered up for public sale, they have not yet made it through that gauntlet to a place where there are those kinds of disclosure rules in place, right? There's higher risk. And because of that risk, are rules about who can participate in investing at this earlier stage. But angels, when we talk about an angel investor, we're not talking about somebody who's doing investing on the public market, because that could be any of us. We're talking about people who are investing in companies in that earlier stage when a company is still private. For the most part, angel investors invest in the earliest stages of a startup. The term that I use, and I've heard others use that really resonates for me, is when it is trust-based capital.
Yeah,
Meaning,
that's great.
it is money that you are investing because you are trusting in the founder that you've met and the information that they're providing and the vision that they have. It's in place of evidence-based capital, which happens
Right.
later on when you've got, all kinds of quantitative metrics that you can look at to help you make a decision.
I think with angel investing, a lot of people see like the company going public, like let's take Peloton, right? A
Yeah.
big consumer, and everyone's like, "Oh my God, like Peloton went public, all those people made all that money." And the thing is that, and I mean, I actually listened to the How I Built This episode with Guy Raz, with the founder of Peloton, and it was definitely not all unicorns and rainbows, and it rarely is for any, startup investment. I mean, by the time Peloton entered the mainstream, it had achieved scale. It had virality and everything else. But there were so many years before that, before it got to that point of like it being in the mainstream. And I think that a lot of people don't realize that Peloton, like many other companies, very, very shaky ground when it started.
Yeah. And I'm glad that you mentioned Peloton. This is a great one. 'Cause, by the way, I don't know if you have Peloton holdings, but I do, and they're not very pretty these days.
We
But
got rid of ours. We have our Peloton bike. That's the extent of our holdings.
I'm looking at my Peloton bike right now. But yeah, so one of the reasons I love that you mentioned Peloton is a great example of a startup whose biggest moments of inflection could never have been predicted. Because the first really big moment of inflection were the lockdowns, the COVID lockdowns, when all of a sudden we could not go to the gyms that we normally go to. We could not go to the workout studios. There was a period of time where we couldn't even join our run groups together if that's what we do. So for many of us for whom fitness is a part of our daily life, we had to come up with a fundamentally new way. So all of a sudden, sales of Peloton bikes, and at the time it was only the bike, that I think they hadn't even introduced the treadmill yet, right?
Right.
Like sales of the bike went through the roof, subscriptions to their app went through the roof, and they had to figure out how to deliver the same kind of quality at a scale they were not yet prepared for. So that's one huge
Right.
moment of inflection. And then, of course, things changed. And a couple years later, we can go back to the gym. And so now they're at this, now that, then they arrive at this place where they've got to make it something that people continue to opt into, not because they don't have any other choice, but because it's still an experience they can't get anywhere else. So they could never have predicted those things. And we learned, after the fact, one of the things that happened is there ended up being all kinds of problems with the equipment when they tried to, when they had to suddenly scale at a totally new scale. And a lot of that, some of the equipment ended up being recalled, and
Right.
it was taking months to get your bike delivered or, what have you. So it's just a great reminder that you can, in the early stages of a company, that's why I call it trust-based. You're investing in a belief and possibility. I mean, you can't ever know everything that's going to come, right? That could change the trajectory of that particular business.
I mean, the two stocks from COVID, let's face it, Peloton and Zoom. Those were the two stocks,
Yeah.
right?
Actually, Costco.
Okay, fair.
I made a heavy bet on Costco not long before COVID that I feel pretty good about.
All right. So those are examples of public companies that were once private
Yep.
that no one was around when they were in the early stage private stuff, like when an angel investor would come in.
That's right.
All right, Megan, let's talk about angel investing and the risks of angel investing, because I think this is an important conversation. When you're going to sell your stock, Microsoft, Peloton, Zoom, Costco, it's still a somewhat liquid investment because there is a marketplace. It's just a matter of what people will buy and sell the share of stock, right? Now, when you're investing in a private company, the liquidity aspect in terms of being able to get your investment back or cashing out at some level, there's a different level of complexity here. So maybe we
That's
could
right.
talk about that a little bit.
Yeah, absolutely. So you're right. Stock that we buy, equity that we purchase through, public markets, it can be liquidated fairly quickly. Doesn't always mean it's going to be at the best term that you want to, but you can
Right.
liquidate it pretty quickly. But early stage investments, startup investments, part of what makes them particularly risky is they are illiquid in nature. You are buying into a company on a type of investment vehicle, a type of agreement with the company, a type of contract, with the company, in which there's going to be limitations on your ability to sell or transfer those stocks, right? So it's not the same as being able to just publicly sell them. There are some secondary markets for some later stage startups that aren't yet public. But for the most part, angel investors are the folks who are investing in the earliest couple of rounds when a company is first raising money to get growing fast. And those types of agreements are ones in which your money is going to be locked in for a while. The average number of years, I wouldn't even say anymore because it's changed so wildly, and right now that the market is so wild. But I think it is safe to say that you should assume that you can't touch that money for 7 to 10 years, right?
Yeah,
There's
I
always
think
going to be
that's
some exceptions. Yeah.
right.
Some slices of, some sectors it's taking longer. If it's life sciences,
Oh,
the
life
life
sciences
sciences
even
space,
even longer, especially
that's
biotech.
that's right, where you've got things like FDA rules in Windows and then patent rules in Windows and how those oversect or overlay each other and intersect for life sciences. That's a long window. And sure, there are always some examples of ones that, return cash a lot quicker. But in general, you should be thinking this is money that I'm going to invest and this particular piece of my portfolio I'm not going to be able to liquidate for maybe a decade. Like it's that kind of
Yeah.
investment.
And it's also the earlier you get in because it is trust-based investing,
Yeah.
right? The more speculative it is because you get more shares, so to speak. You get more of an ownership of the company early on, but the risk is so much higher.
It's a trade-off. That's
Yeah.
exactly right. The earlier you invest, the greater the potential for upside. If this founder is lucky enough and disciplined enough, right, for
Right.
all of the stars to align to hit that vision of what's possible, which is extremely rare. Most don't. Every now and then, though, they do. And so the earlier you invest, the more upside there's going to be. And the trade-off is the longer it's going to be before for you, right? That investment is one that can be liquidated.
So without making this too complicated, because we're trying to make it simple, but I think this is also an important concept in angel investing. I want to talk about dilution, right?
Hmm.
So I'm investing in a company, let's say like 5%, right? I have like basically the number I contribute, the dollar amount I contribute leads me to have a 5% ownership at the beginning, at that angel investing stage. But if the company is doing well, they're going to be getting more investment along the way.
Oh yeah.
And my 5% will not remain 5%
Yeah.
as more firms, and we call them venture capital firms, come into the equation. So maybe you could talk a little bit about like just because I want people to be clear that like if
Yeah.
you invest early on and like let's say it is like a 5% ownership percentage, if you're doing it right, your owner percentage will go down a little bit.
Yeah. Oh, it'll go down a lot. And
Yeah.
actually that's a good thing. And here's why. So
Yeah,
yeah,
that's what
so
I
if
mean.
we
Like
if we
the dilution is actually a good thing. It generally means that it typically means that things are going in the right, not all the time, but it typically means that things are going in the right direction.
Yeah, that's right. And so if we and I'll take even kind of a couple steps back, Jill. So
Hmm.
yeah, so let's imagine that some of your listeners here have never heard of angel investing or it's totally new or they
Right.
they they everything they learned about it they learned from watching Silicon Valley and
Right.
HBO. So they might have some ideas about it. So a couple of things. So if we back up, one is that of all businesses formed in the US, 99% of them will never take money from venture capital. They won't. They will earn revenue, and that revenue will drive their growth, right? And that's how they will grow. So we're talking about a small percentage of companies. So it's 1%, less than 1% of companies that will actually take in venture capital. Venture capital, again, not a legal term, but venture capital is that term for that money that is invested in those early stage companies that show that rare promise to scale significantly, to take up slices of market share, right? So that's the kind of scale that we're talking about, that kind of venture scale thing. For a company to really pull that off, they're going to need to bring in infusions of money multiple times because they're on to an opportunity to capture market share. And if they wait for revenue to be able to fuel that, they will miss that window. So venture capital is about helping identify those inflection points where infusing capital right now is going to help that company, right, continue to take up market share. So at its simplest, that's kind of what it is. So however much money you put in the beginning as an angel, it will never be enough to help a
Right.
company be able to do that. As angel investors, we're typically investing in the rounds that you might hear called pre-seed or seed stage. Those are not technical, those are not legal terms. They're just commonly used terms to describe the very beginning. When we're putting in
Or like a
money.
friends and family round, sometimes I hear as well.
That's right. A friends and family round or an angel round are all types of, pre-seed rounds, but that's like all those early stages before we've even agreed on a valuation of the company, right? So super early. So when you have invested in a company early on and you believe its potential, you believe it could be the next Zoom, you believe it could become Costco, right? It could replace Costco. Then you're going to need that founder, that startup, to be able to keep raising money in successive financing rounds that get bigger each time. So that percentage, that 5% that you described in the beginning, Jill, where maybe you invested in a friends and family round, somebody you went to school with who you just
Right.
really believe in their ability to build this thing, and so you decide you're going to invest in them. That 5% that you own today, every time they do another round, as an angel, you're going to get diluted more and more. Your percentage is going to be smaller, but the idea is because they've been able to raise more, you're holding a smaller piece of a much bigger pie, right?
Right.
And so, yeah, so if you decide that this is a space, this is a kind of investing you want to be in on, those are kind of some of the things that you learn. They're like, be okay with dilution. Dilution can be a good sign. It's not necessarily a bad sign, right? Like it means that more money is coming in and it's that money that's going to get that company to a place it could be. There are some angel investors, very few, but there are some angel investors who personally keep investing at each of those levels. Peter Thiel was an angel investor in a number of his holdings before he's investing through a fund, right? Um, and so, yeah, there are always some angels who stay, but for the vast majority of us, we're investing in the earliest stages. The size check that we're each personally writing is significantly smaller than a check that's going to come from an institutional investor or from a venture capital firm a little further down the road. And our holdings are going to get diluted over time. But if that company really succeeds and it continues to grow, that small holding is still going to be really valuable.
Okay. All right. So, Megan, when talking about angel investing, I think the other question that popped into my mind that I imagine that people have is why wouldn't you go to a bank, like a traditional bank, like, like whatever your local bank is, to get a loan? What's different about getting funding like angel investors and then venture capital versus going to a bank and getting a loan?
Yeah, it's a great question. So if we kind of go back to those numbers, 99% of businesses, if they have a growth opportunity ahead of them and it's bigger than or coming sooner than that amount of revenue can support, a loan is the right thing to do, right? An SBA backed loan, a bank loan, sometimes, there's other other ways that you can borrow money, but borrowing money is the smartest way to grow for most businesses. But for that small fraction, that less than 1% that we talked about that are on this significant trajectory, truly heading for slice of market share, they're never going to have enough proof points to satisfy a lender, right?
Right.
And so a lender is going to look for a different set of metrics than a startup can provide for the kind of the size, the amount of capital they've got to get their hands on to get to that next milestone. So that's one fundamental difference, right? The other is that if you want to grow something really big and actually disrupt an industry, change an industry, come in and, and topple the number one or two in a particular sector and take over that place. So we're talking like that big of an impact. You're going to have a better chance of doing it with really smart people around you. So going back to what I said in the very beginning, I believe in the power of community. I believe I'm a better human for the people that are around me. Well, if you want to build a company that is really going to, change the game in a particular sector, impact lives at scale, bringing on investors is one way to surround yourself with people who have the expertise and the experience and the connections to make that happen. And taking money from them as an investor is a way that you are sharing in the rewards with them as they have helped you build it along the way. So it's not just for the money, right? The difference between taking a loan or taking investment isn't just about the money. It is also about building that community of people who have, your success is going to be their success. And so their interest in helping you get there multiplies by the fact that they get to share in the success as you get there.
Yeah. I mean, I think there's a lot there in terms of evaluating what the right funding vehicle is, whether you bootstrap, which is self-funding, for those of you who may not be familiar with that term. Now, with angel investing, it's typically, you're talking about a product-based business as opposed to a services-based business. Is that fair to say, or do angel investors sometimes fund services-based businesses?
Yeah, well, angel investors can invest in anything that they want to that they see, potential for return for. Service-based businesses don't typically scale. They
Right.
can grow, but when we say a service-based business, for the most part, what we mean is a person delivering a service. And Jill will only ever have so many hours in the day to personally coach people, right?
Right.
Like
Exactly.
there's only so many of Jill.
Right.
But
We
when
don't
you,
need more Jills. I can tell you that right now, that it
well,
might be a
it might
skip.
be a better world with more Jills.
I don't know.
But if Jill wanted to go from impacting the number of people that she can, responsibly and with integrity deliver quality coaching to in a particular week, we have to move beyond Jill delivering it to some kind of a technology that's an accelerant that allows you to now, each Jill to reach 100, to reach 1,000 clients at a time when she used to be able to reach one. And so sometimes angels are investing in kind of service-based companies, but it's because they're driven by a technology or they're driven by something that allows them to get to some kind of a scale.
Yeah, I just wanted to, make that clear because I know, right now what I think is awesome is that and I don't know if it's because I'm in that age group also mid 50s, but you're hearing a lot about the midlife pivot for, and I think it's great that, talking about the misogyny in tech, not just in startups, but all of tech. And then I was in investment banking before. The misogyny is real and it's so pervasive in so many subtle ways. But, because I know there's a lot of women who are, they're thinking about how do they get their funding or do they bootstrap it themselves or they're doing it as a side hustle type of thing. So I think it's important for anyone who's listening to understand that when we're talking, like typically with angel investing, it's typically businesses that can deliver a return and scale and you're trying to increase your scale in terms of the people that you're impacting.
Yeah. I don't mean to cut you off.
No, you're good.
Yeah, I didn't mean to cut you off, but I'm excited to talk about this because in my experience, in my both professional practice, but also, being involved in the startup community, there's this sort of romantic notion that has developed that like getting investment is somehow a prize, like that it's an indicator of success, and it is not. It is a means to an end, and it is a particular kind of means to a specific kind of end. Most businesses shouldn't seek, don't need, and aren't best served by taking in capital. So you do want to understand if you're going through this midlife pivot, or not even midlife, because we're going to live so much longer and
Yeah,
live
true.
live better so much
We're
longer,
going the
right?
distance. We're going
We
the
are.
distance.
And we're going it joyfully
Yeah.
and in good health. Like those parts matter. But if you're moving into another phase, a new chapter, and you're thinking about starting a business, very rarely should that likely involve bringing on investors. Most businesses won't. Like I said, it's a specific kind. If you are building something that you couldn't possibly build without more money than you have access to on your own, some angels do strategic investments that aren't about startups, right?
Hmm.
What we've been talking about so far is startup investing, what most people think of when they're, when they're engaging in angel investing. But there are plenty of businesses that don't go through that financing gauntlet like on the path to going public, but instead maybe bring in a handful of investors who, and they only do one funding round ever, and it's one group of folks who are strategic investors. They know that industry well, they want to support it. They know it's not going to be the explosive return. It's not the next Dropbox. It's not the next PayPal or Venmo or whatever.
But
But
it could be.
it's a no. There are investors who invest
Yeah.
in businesses where that's not the expectation.
Oh,
That's what I'm saying.
really?
Where
Okay.
sure,
Okay.
where a small neighborhood business, not unusual for people to
Okay. Yeah, that
invest
makes
in that
sense.
small neighborhood business, the restaurant, the bar, the pub,
Right.
the thing that it could return. It could be very profitable. you
Right.
know, a small business can have, 200 million in revenue. It can return a wonderful profit, and the investors in that might do really well. That is order of magnitude different than a multi-billion dollar company, but
Hmm.
it doesn't mean it's bad. It's just a different kind of business. And there are some investors who will make those kinds of investments, particularly if it's an industry they know well, right? And they know that they can lend some support to it.
Yeah. Yeah, that makes sense. I mean, you even see that with some like local grocery stores and like, little neighborhoods and everything else where people want to keep it because it is part of the community.
Yeah, exactly. Um, and kind of, back to your question about thinking about women who might be like at a stage of life where they're like, what do I want to do next? I want to be in control of my destiny from here. Or I
Yeah.
have this thing I've always been passionate about, and I thought I'd missed the boat, but now I realize that's bullshit, and I can catch the fucking boat anytime I decide to build a boat and get on it.
Right.
So if you're doing that, it does help to spend a little bit of time learning how do businesses like the one that I'm building get money, and how do they fund growth? And it helps to kind of understand that, and that will help you kind of find the right resources, and help you understand whether or not that's about bringing on investors. One of the things that I think does not help and complicates things for women is that there's this assumption that women investing in women is charity. We do it out of the goodness of our heart. We do it because we want women to succeed. And that allows people to think that there doesn't need to be a return, that like that's not the motivation, or so that's not what's important. Um, and it does a disservice to women building business because it sends the message that you shouldn't expect to see a return if you're investing in a woman. And it can be really harmful, and it can lead people to just thinking they're out there looking for investors who just want to give them money. Um, Nobody wants to just give you money to build your business. Like that's not, that so an important question if you've never raised money from investors before and you're thinking that this time, this thing that you're going to build, you might want to seek money from investors, you should be thinking about and be able to answer, how are you going to make money for that investor?
Right.
If you can't answer, how are you going to make money for them? Then that's probably not the right path to grow your business. There's going to be plenty of avenues and they're going to be great, but that's probably not the right one if you can't answer that.
All right. So, Megan, we talked about the importance of, figuring out if something is charity or not. So I think that leads me to FBomb, in terms of the FBomb Angels, which, you lead, and some of the key tenets of FBomb Angels. And I believe one of the key tenets of FBomb, and I'm paraphrasing, so I might be getting it slightly wrong, is around we're not doing this for charity. The investments we make in FBomb Angels, like, we're expecting to make some money here.
Yeah,
Right.
absolutely.
So let's get into FBomb Angels. I'm kind of disappointed we haven't heard enough four-letter words yet in this conversation. So if we want to amp up the F-bombs, we can. But I mean, all kidding aside, I think that explaining what you're doing with FBomb, pitches to bitches, if that's still going on, how did you bring it together? And then what are you doing now? What's coming up?
Yeah, it's a great question. And so first of all, it's been a long time since I've been accused of not swearing enough. So let me just apologize, for that.
I mean, for fuck's sake.
Like I said, we are at a point in history where Jesus fucking Christ, we
Yeah.
should be swearing a whole lot more, than
Mm-hmm.
we are. So yes, so FBomb Angels Investment Club is a community of women, who all meet the criteria of an accredited investor. That is a determination made by the SEC, the Security and Exchange Commission. So as we talked about, it's a regulated space. Women who meet those criteria, it's not a test they have to take. It's not a certification somebody puts on them. It means that you meet certain criteria. FBomb Angels Investment Club is a community of women who meet that criteria, and who learn about and engage in early stage investing together. We have a number of kind of tenets that are important. So fundamental beliefs that we share, within that club, within that community. One of which is this is not charity, right? We are here for returns, and we are unapologetically looking for returns. We are looking for businesses that not only are of interest to us, solving a problem we give a shit about, but that also show promise of actually being able to make it through that, like I said, that just incredible gauntlet to get to what's possible. We're looking for those. We're looking for those few companies that likely could deliver a spectacular return back to investors. I believe, and part of where this came from, and I co-lead FBomb Angels Investment Club, so I'm not the only lead, co-leader there. But, I believe, and I learned in my career, that as women succeed professionally, we do a great job of inviting them to philanthropic endeavors, nonprofit boards,
Yeah.
charity galas,
Yeah.
right? We teach them how to give away the wealth that they're building. I want us to do by a huge factor better job of, as women succeed professionally, inviting them into business deals, getting them on corporate boards, teaching them, helping them find the deals to leverage their wealth, to continue growing that wealth, because that wealth is a path to, to influence and power. And influence and power is how we're ever going to change the fucking world that is currently a mess all around us. So within the FBomb Angels community, we share those beliefs. We believe that investing together is a really great way to de-risk what is otherwise fundamentally a very risky, right, investment. But we can de-risk that by making investments together. What I mean by that, is 20 women coming together, finding a startup that they really believe in, and each putting in somewhere between 5 to 10,000. Lets that group write a check to that startup for somewhere between, right, 100, 200,000, a meaningful check. But each person's personal risk was pretty small, $5 to $10,000. I'll pay that price to get to sit at the table with really smart women for a couple of weeks and learn from them, right? So when you're getting started, there's a lot to learn, right, as you're
Yeah.
getting practice. And so if the first few investments under your belt, you only lost, $5 to $10,000 on because you were learning, that allows you to build the confidence, the tools, the network to get at the deal flow to make bigger, more promising investments as you go. So that's part of it too, that collaborative investing. I think I make better decisions surrounded by women who might share the same values as me, but have different lived experience, different professional experience, different industry experience, right? To help kind of make those decisions. So that's another part of it. So we like to invest together in the FBomb community.
So last year I was part of Pitches to Bitches, and I had done angel investing previously, just for everyone who's listening. But this was my first time doing it in this type of collaboration with others. And I mean, it was fun because you did, first of all, everybody was really awesome and had very diversified backgrounds in terms of where they were coming from and everything. And that was fantastic. But when we had, how can you say how many applications we had last year for Pitches to Bitches roughly?
Oh, I don't remember exactly, but it was in the ballpark of 70-ish.
Yeah, that sounds about right.
Yeah.
And then we had to get it down to how many?
Yeah, so went from 70-ish down to 5 finalists.
Right. But there was an intermediate step in between there, right?
Yeah. Yeah.
And so you would think that would be really hard with 20 women, especially with all the stereotypes. Like you would think it would be really hard. But you and CP, one of your other leaders of FBomb Angels, right? And we're big fans of CP here.
Oh, yeah.
So we whittled it down, where people went into like a spreadsheet. Like there was a spreadsheet and we went in there and then we discussed like 20 to get it down to like 5 or 6. And there were certain trends where we were like, okay, this is like oversaturated. Like, I don't know, does every year have like a different trend where there's going to be like, there's like 6 companies trying to do this, 6 companies trying to do that? I mean, is that like a common thing in Pitches to Bitches, depending on the year, where you see like these clear trends that people are trying to corner this market?
Absolutely. Yes.
And it was just funny because the first time you see it, you're like, okay, we don't need another company doing this. And then you see like the 5th one and you're like, okay, we definitely don't need all of like, you're trying to find the unique experience. But it was fun because we were all discussing it and kind of just like having like the pros and cons of each. And it was very informative.
Great. Well, that's like I said, that's the idea. So if you just chill on your own, if all of those just came across your desk by yourself and you're looking at them, well, you're only going to have the benefit of your lived experience and professional experience in judging them, and you're going to be less likely to spot your own biases that are, causing you to make assumptions, pro or con, right, about the companies in front of you. But when you have a group well facilitated, with access to some tools and some understanding of how things like group decision making happen and how bias interrupts group decision making, and you bring all of that together, then yeah, you can have really meaningful conversations and get to shared decisions in a way that can be a whole lot better than the decisions you might make on your own.
You know what else I liked that you had for people who participate in the FBomb Angel group at the Pitches to Bitches is that you had like the Angel Investing 101. And you had like 2 or 3 sessions where everybody got together, and some of them were virtual meetings, but everyone was sitting around the virtual table learning about different terms that are important for people to understand with relation to angel investing once they decided to be a part of it. And it creates that esprit de corps that you're in it together and you have this safe space where, there's no dumb questions. And I really liked how you create that because it really enables people to learn what it is that they're doing who, they haven't done this yet. And then if they're around guys, they can't like raise their hand and say like, what does this mean? What does this mean?
Yeah.
Because then they're going to get talked down to and encounter the aforementioned misogyny that you talked about in the investing space.
Yeah, we very intentionally wanted to create a space where, you nailed it. Like there are no dumb questions. There's just information that you don't have yet or things that you haven't experienced before. So yeah, the questions are never dumb, but it takes work to create that space intentionally.
Oh, of course.
One of the things you asked is what we're doing now. So that model that you just described, we've done for a few years in a row now, where we take it, it's an 8-week-long immersive learning experience. We recruit between 20 and 30 angel investors on one side, all women, with a mix of investment experience. And then we build a pool of startup applicants. Somewhere between 40 and 80 is the sweet spot. And then over the course of those 8 weeks, as the angels are learning together, they are working their way through that applicant pool. First to, a round of semifinalists, then a handful of finalists, then breaking into teams and conducting due diligence on those finalists, ultimately getting to at least one company that we extend an offer to, right? That's kind of the model. We paused pitches to bitches this year. We would normally be in our third week of it, but
Right.
instead we hit a big pause this year because we said we aren't sure anymore that that kind of competitive, that competition round format actually serves all of the goals that we're trying to meet well. On one side, one of the goals is meaningful education and learning for women so that you are developing the knowledge as well as the confidence to engage in this kind of investing, this early stage investing. Another goal is getting capital into the hands of women founders who are building highly scalable companies. Trying to do both of those things simultaneously in the same program, we aren't sure if this is the best format anymore. So we decided, one of the things I love about FBomb, we are a learning community first and foremost. So we said, let's hit pause and let's actually interrogate that question. Is this the best model? Made sense when we started it. Is it what makes the best sense right now? Are we able to are we teaching enough with integrity? Are we getting to a place where when we're making a decision, everybody really does feel knowledgeable and informed about the kind of investment they've just made and what that looks like? Going through a program where we only end up with one or two winners at the end, is that the best way to get, is that like a winner takes all kind of model really what we want to be doing going forward? So we're interrogating that this fall, and one of the ways we're going to do that is on the date that would have been the Pitches to Bitches main stage. So this is a little bit of a timestamp for folks, depending on when you listen to this, but on Friday, October 24th, 2025, we're hosting an all-day summit in person. It is called The Next Round, and it is our 2025 Women Investors Summit on capital, returns, and the future of venture. And we're going to spend a whole day just kind of going there on the hard questions, like should we continue on this same path?
Right.
Jill, 10 years ago when I first started in this, women-founded companies got, what was it, 2.4% of venture capital. You know what it is this year? 2.1.
Yeah, I was
Not
about to say it's
only
got to be lower.
not only have we not moved the fucking needle, the needle is moving backwards. And
Yeah.
so if we don't stop and ask, okay, uh, does that mean we dig in harder? Does it mean we blow it all up and try something different? Like what are the implications of that? Why keep doing angel
Yeah.
investing? Should, do this huge gulf that's happening in between like the mega funds and the micro funds, which we see a lot of, particularly those with a gender lens, tend to be these super small micro funds. Like,
Hmm.
is there promise there that we should be looking at them with a different set of metrics? There's so many different ways that we could sort of approach those two things: women leveraging their wealth to continue to grow their wealth, and also getting capital to women founders, with potential. But there's lots of ways we could go about that. So let's not be afraid to ask the question: should we blow up what we're doing? Should we hitch our wagon to some other train that's making more progress than we are? So those are kinds of the things that we're going to talk about. So I'm really, really looking forward to that summit this year.
Now, just to clarify for people, this is in the Seattle area, this event, but do you work with angels who potentially do not live in the Seattle area in any of the FBomb type of events?
Yeah, we did in the spring this year. We did our first competitive round, similar to Pitches to Bitches, but we called it Big Deal Energy. And it
Yep.
was the first time that we did all virtual. The companies could be located anywhere in the US and the investors could be located anywhere in the US. And so we did that in the spring, and it also, led us to two great investments at the end. And then it just raised questions for us as a community. We're about 40 women right now, about 40 investors, some of which are really active, some of which only did one deal and haven't done another deal with us. And so it's kind of the right time to ask, like, can we really build and sustain a national network? If so, what would that take? What would it look like? What's the best way to do that? Because the core group of us are here in person because we started together within the FBomb Breakfast Club, which
Hmm.
started as a meetup here in person. So there's just this core group of us that have a connection here to the Pacific Northwest. So yeah, we did expand and take in folks from around the country, but there's a legitimate question on the table of like, what does it look like to really, support a robust network of women and robust deal flow that's national in scope?
So there are a couple things. I mean, there's a lot of things that you said were great, but the one thing that like stands out to me is I love the whole thing where women are taught to give away the wealth as opposed to continue to build the wealth. I thought that was just spot on because, oh, are you going to organize like the school fundraiser? And I always say, write the check. Do not ever sign up to do the school fundraiser ever. It is of all the fundraising things, I've heard so many horror stories. It's the most thankless job out there. Just write the check. Do not deal with a bunch of parents and the school fundraiser. But I also think that it's more of just a mindset change. You know, it's
Mm-hmm.
kind of like always being asked to take notes in the meeting. Oh, we're being asked to give away our money as opposed to build our money.
Mm-hmm.
And I thought that was a fantastic point. So, Megan, where can people find you, learn more about FBomb, whether they're in the Seattle area, when they're, or they're somewhere else in the US? Where can people find you and get more information?
Yeah. The best place to find out about FBomb Angels Investment Club is our website, which is super easy. So
Mm-hmm.
fbombangels.com.
All right.
So go there. We've got a newsletter. Sign up for the newsletter. That's the best place to learn when we're going to do something, what that next opportunity is. So
Mm-hmm.
that's a great place to sign up. But then also, if this is something like you're truly passionate about, and you don't know where to get started and you want to talk with somebody who's an angel investor, find me on LinkedIn. I'm active there. I am happy to talk with women who are new to angel investing or just getting started. Or my favorite of all are the women who've already done some investing, but they just haven't found the community that where they feel like they really fit. Like these are the people I want to be making deals with. So like if that's you, let's talk. Because that's who I'm always looking for too.
Yeah, and I think that's the thing. How I got into angel investing was because my cousin was starting a company, and it actually worked out very well for us. But it was a friends and family round. We didn't know anything. I didn't know there were like angel consortiums out there or angel groups like that. So I think that also, if it's not something that's common in your friend group, but it's something that you want to experiment and take on a little bit of risk, see what that's like, I think finding those right communities can be a great way to kind of, put your foot in the water and see if it's something you're interested in and understanding the appetite for that. Before we close out, I do have a funny thing. Well, it's an annoying thing, but I think you'd relate to it. One of the things that I commented on someone's Substack the other day about how women always have to justify that they're qualified for something. And the thing that I talked about was, as a lifelong sports fan, New York Yankees, New York Giants, say a prayer for me for the New York Giants because they suck. Um, but I always have to justify that I have a certain level of knowledge because I'm a woman. And I could tell you, my husband has actually been a baseball fan for less time than I've been. And no one ever asks him to justify his Mariners fandom.
That's right.
Never.
And I would bet if you show up to a game together, the assumption is that he convinced you to go with him.
Until I wear my Yankee stuff and I start dropping F bombs. And then, of course, someone in Seattle's offended. But I mean, the thing is that it annoys the holy living shit out of me. Like in corporate environments where they're like, oh, you're a Yankee fan? So when were you a fan? And blah, 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 blah. And like,
Who was on third base of the fourth inning of the
yeah,
fifth game of the 1982 World Series, Jill?
yeah,
Huh? Huh?
yeah.
Huh? Yeah.
Like, what can I tell you? So,
Yeah.
yeah, I mean, I think that it's just having to constantly validate that you're qualified to be at the table when that doesn't happen with men. But anyway, Megan, I loved having you on the show. I always enjoy talking to you. I always feel like I'm smarter as a result of chatting with you. And I really appreciate you taking the time to come on Going the Distance with Go Long. I want to also say this show is not meant to be investment advice. This is just for informational purposes only. You should talk to your own financial professionals before making an angel investment, in addition to finding out if you are an accredited investor. So I just want to put that out there.
Yes, thank you for that. I always remind people I am a lawyer, but I am not your lawyer. Nothing I said in this conversation should be construed as legal advice either.
Exactly. So please talk to your own legal and financial professionals before considering making an investment in this, and in terms of understanding all about what being an accredited investor is. But with that, this is Going the Distance with Go Long. I'm Jill Consort Beck. I'm here with Megan McNally. This show is produced by JR Media Services. And if you like how this show came out, you can thank Megan and you can thank JR Media Services because they did a great job. If there is something that could be improved on this show, please contact me because it likely has to do something with me. But with that, remember, it's your life. Go the distance. Go long.